Well, sales of new homes unexpectedly fell in the month of September. So just what does this tell us about the housing recovery? Joining us now is James Lockhart, Vice Chairman of Wilbur Ross, WL Ross, a well-regarded investor himself here in distressed assets. But before that, you may best know him as the housing finance regulator here in the U.S. He oversaw Fannie Mae and Freddie Mac. So you know a thing or two about just what is happening in this market right now. Thank you for coming in and joining us in studio. We say this decline in the month of September was unexpected. What should we be expecting?
Well, we're bumping along the bottom in the housing market now. I think there's been a lot of government activity. Certainly, we see the home affordable modification program starting to really ramp up. The home affordable refinance program is starting to move forward that Fannie and Freddie are doing. And we're starting to see housing prices stabilize. The FHFA index and the Case-Shiller index are sort of bumping along the bottom at this point.
There has been a fair amount of skepticism that's starting to resurface on the stabilization of home price question. Goldman Sachs out with that, saying maybe things aren't as stable as we seem to think they are now, as they're now firming. But I want to ask you, how much of a game changer will it be if we do see the Senate go ahead and extend the homebuyer tax credit, particularly when there is still such difficulty in obtaining a mortgage?
Right. Well, it will be helpful to the mortgage market, definitely, and there'll be new buyers coming in. There certainly it looked like it helped the market this year, those new buyers coming in. The key thing is to have people have confidence again. Mortgage rates are very low at 5%. Home affordability is pretty near all-time highs. So all the pieces are in place, and we just really need to help restore some confidence in the marketplace and for people to think that their house prices are not going to go down. There's certainly the potential for another swing down, but as I said, I think we're going to be bumping up and down along that bottom for a while.
How high is that potential?
I think there's a reasonable potential. Some people are talking another 5 to 10%. That's a possibility. On the other hand, the indexes seem to be telling us that we're starting to see some stabilization.
How hard is this well-telegraphed, much-expected fall in the commercial real estate market going to be?
It's going to be a problem. It really is across the board in all different categories of commercial real estate. Banks have a lot on their balance sheet, some development loans that are not going to look very good at all. And there's a problem. A lot of these loans are bullet loans, and they're going to have to be refinanced, and there's not any equity in those properties anymore.
Now, you talked about some of the loans still on banks' books right now. In the public-private partnership area, what progress is being made in terms of buying up some of these distressed assets? Because what we've been hearing is the program is in place, but the buying's not truly building.
Well, I think if the public-private partnership is one of the many ways to try to get people buying again. And there is activity in the market, but those private label securities, which they're buying, were pretty toxic when they were created. The underwriting standards were very poor. A lot of them were subprime, all A loans with no documentation, option arms. And buyers are being very careful. They're looking at the individual mortgages before they're buying the securities. The default rates are very, very high. In the subprime area, they're up at 25% for serious defaults. That means more than 90 days. And even the overall mortgage market is now about 8% in default. So people are being careful. They're looking at these securities and they're buying when they see the appropriate prices.
Fannie Mae and Freddie Mac, what you oversaw, still remain a very large presence in the mortgage market right now. How do they get restructured in a way that creates some stability in the marketplace and doesn't wipe out all value?
Well, at the moment, they are playing a critical role in the mortgage market. Over 70% of the mortgages now being originated, they basically put into mortgage-backed securities or buy. And so they are a critical player. They have been supported by the U.S. Treasury, and they will continue to be supported. And the Fed is buying their mortgage-backed securities. Next year, I think there's going to be a very healthy thought about how to restructure them.
All right. Well, we'll follow up with you then on just how that's going to happen. Thank you so much, James Lockhart, now Vice Chairman at WL Ross.